This meeting is being recorded.
Hi, John.
Hi, Richard.
Managed to get on okay this week?
Yeah, this is the first one I've been on this week, so
right.
Yeah, there we go. Now there's a video on.
Yeah, I had a few issues last week. It was my first ever live session. I just couldn't get into grips with the technology. I totally omitted to allow people into the room. They were just sitting in the waiting room trying to get in.
Right, no, you'll get there.
Yeah.
At least you're doing it, aren't you? That's the main thing.
Yeah. Okay, I'm going to get started. I'm not too sure why there's only 4 of us, but maybe get another one. Right, okay, I'm going to start. So can you hear me okay?
Yep, loud and clear.
And can you see my screen if I decide to share it? So what I need to do is share my screen and get started. Okay, so you should be able to see my TradingView screen.
Yeah, we can see that.
Okay, right.
Yep.
So I haven't looked at the chart yet this morning. So I'm basically I'm going to go through just what I do to trade gold, starting from scratch. So we're on the 15-minute chart TradingView. What I need to do is to put up the volume profile. So I go up to indicators and strategies. They've recently changed this, so we now need to go to technicals and then across to volume profile, and I use session volume. So there we are, we've got the session volume profile and it's on several days. I think it goes back to about the beginning of it goes back to the beginning of last week, the 10th. So we're focusing on yesterday, and we need to mark on the 3 lines. So there's yesterday's volume profile. And if I mark the value area, which is the top of the dark blue line, as you can see, it changes from dark blue to pale blue there. The value area is the dark blue. Put the line on there, and the 3rd line we put on the point of control, which is there. And I'll just change the color of that one. Change that to blue, and same with this one. So basically that's the setup. What I normally do is I just flick to the 1 hour chart just to see if there's any variation. Occasionally you get a variation, but no, that seems okay. So we'll go back to the 15-minute. So that's the point of control for yesterday, which is what we're interested in today. This point of control for today is also an area of a point of interest, but because it's only 8:30 in the morning, it still is liable to change. So as the day progresses, that point of control can fluctuate. So we concentrate on this point of control from yesterday. And as you can see, in this value area, which I'll make it easy to see. I'll put a rectangle on that, and we'll put. There we go. You can see that slightly better now. So we look at where prices at the minute and prices within the value area. So that's the first point. Secondly, we notice that price is actually below the point of control. It's actually recently just wicked up to the point of control. So personally, I wouldn't be getting into this trade at the minute because it's likely to reverse. It can go back down to this line here, or it can break through. So I would just sit and wait and see what's going to happen for the time being. Because it's in the field of play, it means that I can't actually do the next part of my setup, which will be if we go back to a previous day. Right, so if we look at this one, which was for Monday, when I looked at the chart, we were in this area here, and we were waiting for it to go into the field of play, which would have started about there, and that would have been the point of control. So we were actually in an area of consolidation. And the thing that I do in order to avoid sitting looking at the chart all day is I mark off that area. And I use a thing called parallel channels. So under Trendline Tools, you'll find parallel channel. And what I did was I marked off where the consolidation was. That's very roughly where the consolidation was. And I put an alarm on that. If you click on the parallel channels themselves, you can set an alarm. Sorry.
Yep.
An alert would be a better word. So put an alert on the existing, on exiting the channel once per bar, create that, and then you can walk away. And you'll get an alert when price moves out. Now, the way I think is that because it's in consolidation, I've got really no idea whether it's going to break out below or above that parallel channel. I had a suspicion that it might break out above because there was a POC above waiting. So I set an alert, and eventually when we got to 7:15 in the morning, I got an alert to tell me that price had actually popped out. And so I waited for that candle to close. And when this candle opened, I actually got into a trade. So this was Monday morning, which was a bank holiday in the States. So it was quite fortunate that I think I got at least 10 pips out of that move there. And that's something I'm doing more and more when price is outside the field of play. We can't do that today because we're actually inside the field of play. So what I wanted to do, by all means, ask any questions. Everybody's fairly quiet, but you can ask questions. We've got one or two more people on the Zoom now. So what I wanted to do was to go over the settings that I use for volume profile. And if I can actually get into, so we're on VPSV, which is volume profile session volume. Going to the settings, I'll just run through them, and I'm going to show you what difference it makes when you make changes. So I'll pop that over there. And there are 5 variables on this inputs chart. So the first one, we have a choice of ticks per row and number of rows. I'm currently on ticks per row. If I change it to number of rows, you see you get a different visual effect. I'm just going to toggle it back to ticks per row. Now that's what I prefer, because you get you're focusing in a little bit. You're going down to smaller measurements, I guess. But the important thing is that point of control doesn't move. It stays exactly the same. So whether we're on ticks per row or number of rows, actually, it's almost making a liar. It's stayed within the same band, but it has actually moved. So it's a question of preference. I think when Jeff set this up, he went for ticks per row, and I stayed the same. Going on to row size, again, personal preference, but I was on 20, I've just changed it down to 10. And you can see you're getting a much finer, the rows, the bands are much smaller. So I'll go back and just toggle that back so you can see what happens. So I'm on 10, and I go back to 20. And then we'll try a bigger one just to emphasize the difference. We'll try 50. And the bands are even bigger. But the point being that the actual point of control is very little difference. So it's really down to your personal preference, how you like to see the information presented. I'll go back to what I think was Jeff's original setting. There we go. And then go on to the next setting. You've got a choice on the volume. You can either have volume up and down, or you can have the total. So I'm on volume up and down, and the blue strips are volume up, and the yellow strips are showing volume down. So what that means is this is the volume of buyers, and this is the volume of sellers. For what we're trying to achieve on the V70 strategy, we're really not that bothered about how the total volume is broken down into buyers and sellers. So if you wish, you can go to total volume. So we've now changed to total volume, and you see you've got the same effect, but you've got one color instead of two. So that's a total volume of orders placed within the value area, and we're using the same colors. It's just a personal preference. I'll go back so you can look at that again. That was how it was. And we'll go to total. That's what you get. And then the fifth one on this inputs is extend POC right. I've got it ticked at a minute. We'll just have a look at what it looks like without. Did that make any difference? It doesn't look like it did. No, it didn't seem to make any difference. For some reason, that didn't work.
Click OK, it'll change it. If you untick it.
Just move that out of the way and try again. Doesn't seem to be working for me at the minute. Anyway, I'll just move that back. And we'll go on to the next step. So we've gone through the inputs, very much a question of personal preference. And if we go on to style, okay, so if you want to see the values, now where are the values? My chart doesn't seem to be responding too well this morning. So okay, so I'm going to skip that for now. I'll come back to that when I've found out what's going on. Width of the box. That refers to the width of the profile as in relation to the full day. So if we change that to, let's say 70%, you can see that it extends, it goes 70% of the width of the whole day. We were actually on 30, which seems to work okay for me anyway. And that's the setting that Jeff chose. And some of these are fairly obvious. We're placing it to the left, we can choose to place it to the right. Place it to the right, it appears on the right-hand side of the dais. And then up volume, down volume, and value area up and value area down. So the up volume, which we in the last one right. So if we go back to up volume, down volume. So up volume is where I've got here. I've got sort of a slightly greeny color. That's this up volume, and I can make that a darker color by changing the opacity here. So you can see it's gone to a dark green now.
Yeah.
I prefer it slightly paler so that it is clear where the value area starts. No, I'm on the wrong one there. There we go. So up volume, down volume relates to these areas outside of the value area. So that's green and gold there. And the value area up, which is blue and gold, it relates to this area here. The POC turns it on and off. And you can change the color using this. And then there are a couple of other ones which I don't use, but I've had a look at and they look quite interesting. One is the developing POC, which for some reason, this is not working on my chart this morning. But the developing POC shows how the point of control has changed. Oh, there we are, look, on there. On yesterday's point of control, we have, you see this line here, which goes along and then drops down. And then for that period there, and then it went up, and then it went up again, and then it went down again. So you've got the the average point of control for the day, which is the red line there. It's a thicker red line where my cursor is now. But you also got a developing, as the day went on, it started off up there and then it came down and down, and then it went back up and then it came back down again. So if you're doing analysis of the volume, the changing volume profile, that might be useful too. And the developing VA refers to the value area, which is this area, and it simply shows how this has changed. You can see the parameters that this is the top of the value area and the bottom is here. So it's gone down and then back up again. I think that's a bit more advanced, a bit too advanced for me at the minute. And then the last one is the histogram box, which, if you can see on my chart, there's a pale blue area there and it changes to white. And that's showing, if I make it darker, this is showing the total, the extremes of the value area of the extremes of the total volume profile. So there were no orders placed above that blue line, above that blue area, and there were no orders placed at a price below that area. I think that's a bit distracting, so I'll take it back to where it was. And I like it sort of that color, but again, it's down to personal choice. And I hope I haven't changed too much on my chart. Right, any questions on that, on the settings?
That's really good.
Okay. Now, I think I already covered the alert that I used, but I'll just very quickly go through it again for those who weren't on when I did it. And that is, if we look at Monday's chart, when I opened the chart, which was pretty early, I looked at the chart on around about 3:15, 3:30 on Monday morning. I don't know why I was up and about then, but I was. And it, I'll just get rid of that and do it again. Just for those people who weren't on when I did it at the start of the session. On Monday morning, when I looked at the chart quite early, we were in a period of consolidation here. We were outside the field of play. This was Friday's chart, and the field of play started here, and we were outside the field of play in the early hours on Monday morning. So rather than sit and watch the chart and wait until it entered the field of play, I put an alert on this area here, and the alert that I chose to put on was parallel lines, which you'll find under trend line tools. There's, sorry, parallel channel. And if you click on parallel channel and you place it there and drop it down to the bottom, you can see that there's an area of consolidation where price is going up and then coming down and going up and then coming down. So I wanted an alert to tell me when price came out of that channel. I didn't know at that stage whether price was going to come out, break out below the channel or above the channel. I suspected it was going to come out above because the POC was up there. But I set an alert on that, and this is how I set the alert. You click on the box, you click on the alert, you ask it to alert you when it's exiting the channel, once per bar, and create. And then you can walk away and you'll get an alert on your computer and also on your mobile phone if you set it up for that. And sure enough, at about 7:15, I got an alert that the price had come out of the box. And I waited till that candle closed and I entered the trade at 7:30-ish. and I managed to get about 10 pips on that. There were at least 10 pips. I'll just measure it from the bottom of that candle up to the top of that one. Well, there are actually 29 pips. I seem to remember I got 10 of those. So that's the alert that I am favouring at the minute. It wouldn't be any good to me today, not at this point today anyway, because we're actually within the field of play. And as you can see, prices hovering around the point of control. It's actually looking as if it's going upwards, and I suspect it'll go all the way up to the edge of the value area and then bounce off that line there and come back to the point of control. It's looking like it's going to be a sort of a multiple point of control day, a multiple hit at the point of control. It's going to bounce up and down, either from the top to the bottom or from the top to the point of control and back to the top, maybe breaking through and then back to the point of control. But it's looking like it's going to be, at least for the first part of the day, it's going to stay within the value area. When we get to sort of 1 o'clock, 2 o'clock, 3 o'clock, it may decide to go on a wander. If it does decide to go on a wander, I suspect it's actually going to go down, and I'll tell you why. One of the things that I'm using at the minute, I'll get rid of that distraction. If you zoom in, and if it's perhaps easy to do it on a 1 hour channel, 1 hour chart. So we've got exactly the same information. I've just changed the time frame. But what I've got now is I think Jeff refers to this as unfinished business, in that here's a point of control from a previous day, which as yet has not been taken out. So this is from the 10th of January. And the point of control is still present because price has never been back to that point. If you look at this one, it was taken out yesterday. But this one is a point of interest. Jeff would call this a PRZ, a potential reversal zone. And what he's referring to there is, if you think about it, the banks have invested quite a bit of money at that point. On this, if you look at the day in question, here, the biggest volume of trades on that day was at that point. And yes, that point of control was taken out a couple of times during the day, but there's still money lying on the table. And if they're going to get that money back, they're going to have to take price back to that point at some stage. So there's a price which is worth bearing in mind. It's the price to take note of is 1794.47. And if price is going to go on a wander, or as Jeff calls it, discovery mode, it's probably going to go down to this area. However, bear in mind that there may be something above. This is a little bit like imbalance. What Paul was talking about imbalance yesterday, he does on most of his sessions. This is an area where price may well go. However, we don't know whether it's going to go there today or next week or next month or maybe even next year. We don't know. But it will go back there at some point. So it's worth keeping an eye on, because if price comes out of our field of play, the first target it's got is right down here. And what I may be able to show you is there may well be some Ah, yes, I spotted it there. Look, there are some lines above the field of play, and these are going back to, that one is going back to the 18th of November, and this one is going back to the 22nd of November. So same applies. The banks have left some money on the table here and there, and sooner or later, they're going to go back and pick it up. So situation we've got today is we're in the field of play. It's looking likely that until New York opens at 1 o'clock, it's probably going to stay in that field of play. We might get some opportunities to get some pips when it goes back to the POC. But looking at 1 o'clock, 2 o'clock, 3 o'clock this afternoon, we suspect it might go outside. And there's a couple of areas, a couple of potential reversal zones there, 2 above, and we looked at 1 below earlier. Don't know where that one's disappeared now, but it's there it is. So we've got some potential targets for later today. My gut feeling, and don't ask me why, but I've got a gut feeling that we're going to start going down at some point this week. I think we're due a wander south.
Hmm.
As I say, I would find it really difficult to explain why I've got that gut feeling, but we'll see. I could be wrong. Right, okay. Are there any questions about that?
Yep, that's great.
Okay.
Morning, Richard.
Morning.
Hiya. So like yesterday, it went at lunchtime when America kicked off, and it really jumped down very quickly and went down to that previous point of control, and it was quick. Would you, or have you thought that if it's going to move out, say south from where it is in the area just now, would you ever put in like a sell stop at some point below, on the view that if it is down at your sell stop level, it's well away enough that there is a move in progress potentially, and then take it down a level?
Yeah, my personal view on buy stops and sell stops is I've been caught out quite a few times where price has gone down to the point at which I've set a pending order and then reversed. And so I try not to get involved in sell stops and buy stops for that reason. What I prefer to do is perhaps put an alert on that line, whatever line you were thinking of putting a sell stop on, put an alert on that line, and then come back and look at the charts when the alert fires. And I would be looking for price to break through that line and perhaps a candle to close below that line, rather than blindly set a pending order, which you could get stopped out fairly quickly if it reverses. Am I explaining that well enough?
No, I've tried it and done it, and that's happened as well. And the only thing on it is it's so fast. It can be so fast. I mean, maybe something bit, generally best avoided, and you're going to get caught because it's good for a few pips, but a big move is a risky job maybe.
Yeah, I mean, I think if your lifestyle is such that you literally cannot, if an alert goes off, you cannot react to it, then fair enough. You're probably in a position where you have to place pending orders. But I'm never too far away from my laptop. I don't sit watching the charts all day, but I can, if I get an alert on my phone, I can take a look at the charts on my phone, and I would look for, if I was thinking about setting a cell stop, say down at the, say 1808, for instance, as an example. If you set a horizontal ray at 1808 and you then put an alarm on, sorry, an alert, I keep calling them alarms, but it's the same thing, I guess. So put an alert on that horizontal ray and tell it to alert you every time it crosses that. You can create that, and yes, there we go. There's the alert. And what will happen is when price comes down to this point, instead of pending order triggering it automatically, you can actually watch what's happening with price. And what I try and avoid is getting in too early. And if price comes here and then goes slightly below, but then goes back up again, your pending order would get stopped out. And I prefer to wait till price goes below my line and the candle closes below the line, and then consider getting into the trade. You might lose a couple of pips, but you might save a trade. You might avoid a stop loss by doing it that way. So
Yeah, yeah.
that's just the way I do it.
I'm definitely kind of getting that view. Thanks very much.
Yeah, okay. So that's my personal view. Others may disagree with it, but I find that approach works for me. And it's saved me getting stopped out quite a few times. And I watched Anastasia, who does sessions on Go Live around volume profile, and her approach is the one that I've just described. Wait until a candle closes outside. So if we're waiting for, if we're on a sell stop at that point there, we would wait until a candle closes outside. But so for instance, this candle is actually closed outside the value area, whereas that one she would say that you're getting in too early because that one didn't close outside. Well, perhaps it did, but it wasn't. She says is there air? She's Polish or Russian, I'm not quite sure. And she uses the word air, and what she means is there a gap? And this candle here has got a gap between the line and the candle, and she would say this one there isn't air between. It's actually covering the line. So this is the candle she would get in on. I chose a bad example there because two candles later it reversed. But again, it proves the point. You need to make sure that the price is actually heading south and not just testing and reversing. And so you're better off getting in at this point here rather than getting here and then getting stopped out and price reversing and taking you out. Okay, I hope I've explained that. Right, so what I wanted to do, somebody asked me a question about the lot size calculator. And might be worth just doing very quick. Where are we? If we go to my FX book and my FX book and we go to calculators, and my apologies if somebody watched me last Wednesday and I did the same thing, but I've had a couple of questions about this, so it's perhaps worth going over again. When you first open this calculator, it automatically takes you to Euro USD. So to make a point, I'm just going to stay on that. I'm going to change the settings to let's assume my account size. I'm working in British pounds and my account size is £20,000, and I want to risk 1% on this trade, and my stop loss is going to be 20 pips. I would leave this trade size as is. It's currently 1, and I would leave it at that, and I would ask it to calculate, and it would say, okay, your account is 20,000, so you're risking 1%, so you're risking £200, and therefore your lot size needs to be 1.36. And you can put 50 pips in there, ask it to recalculate, and it'll tell you with a stop loss of 50 pips and you're prepared to lose £200, your lot size is 0.54. The queries I've been getting is about how to use this calculator when you're trading gold. And so if you type in XAU USD, change it to British pounds, still 20,000 account size, still 1% risk, and still 50 pip stop loss. This is the area we're getting confusion with. The trade size has automatically gone to 0.001, and that will give you a wrong reading. That will, if I just calculate that, that's telling me that I should be, to risk £200, I should have a lot size of 5.44, and that's wrong. You need to make one change. You need to change it to 0.1. Sorry, 0.01. 0.01 is the setting you need to get an accurate. And so I'll just go through that again. Currency pair XAU USD, Great British Pounds, account size 20 grand, 1% risk ratio. You can check that. If you put swap with money, it'll tell you that you're actually risking £200. You can swap back. So you're risking 1% on this trade. You've got a stop loss of 50 pips, and your trade size must change to 0.01. Calculate, and it'll tell you 0.54. So I would say that's absolutely crucial. If you don't change this, you'll end up with 5.4. So I'm just going to go through that once again. If I come out of calculators, go back into calculators, you'll see that the setting resets itself. It goes back to Euro USD, and the trade size is 1. Now that's fine. That's great with Forex pairs. All your Forex pairs, your trade size needs to be 1. But you need to change it for gold. So it will automatically come up at 0.001. You need to change it to 0.1. Sorry, 0.01. 0.01. And then get your calculation. It'd be 1.36 on a 20 pip stop loss. If your stop loss is 50, it'll calculate it 0.54. I found that by trial and error, but it works every time. It works on silver as well. So silver and gold, you need to change your lot size. And I would say that if you're trading indices, if you're following Jeff's sessions, you'll need to find out through trial and error on a demo account what that number needs to be I would suggest for each individual indices, because there may be some variation. I haven't done the trial on indices purely and simply because I only trade gold these days. Okay, so I think I've more or less done everything I plan to do today. So are there any questions on anything that I've covered, or any other questions?
I do have a question, Richard, if that's okay.
Yeah, that's fine.
I notice you're on Heikin-Ashi candles. Do
Mhm.
you trade with that particular style of candle, or do you use the Japanese candlesticks?
My response to that would be well spotted, sir. I didn't
Eagle eyes.
intend to be using Heikin-Ashi candles. What I would say about the candle situation is I actually use both.
Okay.
When I'm setting up my trades, when I'm setting up my charts, I set them up on ordinary candles. But what I'll do is I'll go through what I look for before I place a trade, and then we'll just about be out of time. So if I was looking at my chart, if I'd just come to the chart for today and I looked at yesterday's value area, I'll just get rid of that blue there. So we've got the value area there, which is from the top of that section there to the bottom of that section there, and I've also superimposed a line on the POC. So that's the basic setup. I'm using normal candles, and if I'm looking at a trade now, let's look at the current situation. The price has moved. It's moving slowly away from POC, and I suspect it's going to return to this top line here. If I was going to get in a trade, if I say I was going to get in a buy right now and take the buy up to that point there, before I jump in, I would look at a few confirmations. First of all, I've got this volume profile here. So it's not volume profile, it's volume. I would look at that candle here, and I would see that we've got a fairly low volume at the minute. Now this indicator shows volume at that particular time. It's showing volume on that candle, and that's a 15-minute candle. Move it back one, and it shows what the volume was between 9 and 9:15. So you're looking at fairly low levels in comparison with, let's say, this area, and that area happens to be between 1 o'clock and 3 o'clock. And that is normal for gold. We normally get the peak of volume between 1 and 3. So we're looking at a fairly low, right now we're looking at a fairly low level of volume. And that's volume of all orders placed at that time. It's got nothing to do with price. It's just number of contracts placed within that 15-minute period. But it's an indicator, and it's something you can use. So that's the first thing I look at. So we'll get rid of that. And with now, I would put on the matrix. Now, on a 15-minute chart, my setting for the matrix is 1 hour. If I drop down to 5 minutes, I drop that number down to 30 minutes. It seems to work more accurately. If you're looking at the 1 hour chart, you probably need to put that up to 2 hours. But on a 15-minute chart, I leave the matrix time frame on 1 hour. And so just looking at the matrix, we've got a matrix up, which started there, and it's still green. So there's another confirmation. If we were looking for a buy, there will be a positive confirmation. The next thing I would do is, sorry, did somebody speak? No. I would look at the Ninjacator. And for the Ninjacator to work properly, you need to be on Heiken Ashes. It was designed to work with Heiken Ashes rather than normal candles. So we get a slightly different picture here. We're getting these candles are more smoothed out than the previous candles. So what I'm looking at now is we've got a Ninja Matrix up, which is pretty well hidden behind that Ninja up. We've had a recent Ninja up. So there's two confirmations that we're looking good for a buy. And then I've got another indicator that I use, and that is the moving averages. So as you can see, when I move my cursor away, the yellow line tends to disappear behind the candle. So if you want the yellow line to be more clearer, you need to hover over where it says Ninja up, or you can hover over the red line there. And so the yellow moving average is actually the 5 moving average. The one that changes from green to red is the 13 moving average, and the orange one is the 20 moving average. Though I use those all the time. What I'm looking for as a final confirmation to get into this buy is for the yellow moving average to be above the green 13. And ideally, I'd also like it to both the 5 and the 13 to be above the 20. That to me is an ideal situation. And just as a final confirmation, the PSAR is below price, and it's quite a distance below the price.
Yep.
So if you look here, the PSAR was almost touching the candle, and I wouldn't have got into a sell in that situation. The further away the PSAR is from price, the better, as far as I can see. So I would say that we're looking good for a buy. And I would, if I was to take a buy now, I would set my target at that 18.18, or maybe just slightly below. I'll maybe set it at 18.18, because sometimes it will stop slightly short of the line. As far as stop loss is concerned, if you wanted to be safe, you could set your stop loss just slightly below the PSAR. If you wanted a tighter stop loss, you would go maybe to that bottom of that candle there, might be a tighter stop loss. Or something that I do, if I'm looking at getting, there's about 20 pips there. There's about 20 pips from where price is now to where I think it's going to go. So I would go for a 1 for 2, 1 to 2. I would maybe have a 10 pip stop loss and a 20 pip take profit. I'm not saying anybody should get into that trade, because I'm not a financial advisor and all that. I'm just a guy trying to pass on his thoughts. But that is looking like a pretty good setup. It gives me all the confirmations I look for when I'm entering a trade. We've got the Ninja Matrix is green. We've got a Ninja up. We've got the moving averages all in the right place, and the PSAR is fairly well away from the price. So I would say, if you're willing to be patient, and the reason I say that is because volume is fairly low at the moment. There's not a lot of volume on this particular candle, although it's literally just that candle has just opened 10 seconds ago, so give it some time. But there's not a lot of movement in price as well at the moment. But I would say it looks as if we're going north, and we're probably going to 1818.
Richard, are you always looking for the 5 to be splaying away and widening from the other?
Yes, I mean that situation there is an ideal situation. It's actually moving away from the 13. It's heading upwards and it's moving away from the other 2. And the bigger distance between the 5 and the 13, the better. And if you sort of back test that, you can see that here it was moving down, and the 5 was increasingly moving away from the 13. And as soon as it changed direction, that was when price changed direction.
Yep.
So I keep an eye on the 5. If that yellow line there starts to level out, I would think about getting out of the trade. If I was there to watch it, but that does look like a reasonable trade. I think.
Another quick question, Richard. If you're sitting watching it, what time frame would you be looking at?
Yeah, another good question. I would
Go down to the 1 minute.
I would revert to normal candles to start off with, because they give you a more accurate reflection of where price is. And I would go down to 5 minutes, check it out there, and I would also go down to 1 minute. And as you can see, the 1 minute is the problem with looking at the 1 minute chart is it can fluctuate rapidly, but it just gives you a feel of what is actually happening. So the 1 minute at the minute is, we've still got a Ninja matrix up. We've still got the 13 MA is still green, and the 5 MA is still pointing upwards. The PSAR's at the top, which is a minus. But I would look at, well, there we've got another positive. We've got a ninja up, although we're not on Heikin-Ashi candles, so be cautious about that. But the price is going up, look, it is going up. 5 minute is probably gives you a better feel. We've got a fairly strong upward candle on the 5 minute. And so the only problem we've got at the minute is a lack of volume. There's not a lot of orders being placed, and that's purely because we're looking at 9:30 in the morning and New York's not even thinking about opening yet. But it is looking positive. I think it's going to go up to 1818. Right. So, any further questions? So thanks for asking that. I do tend to, I forgot on my first session last week, I forgot to talk about Heikin-Ashis when I use them. So yes, I do use them, but I use them as a sort of a confirmation. Well, I mainly use them so I can look at the Ninjacator, because Kevin designed an Ninjacator to work best on Heikin-Ashi candles. So I flick backwards and forwards between Heikin-Ashi and normal candles. Now I flick backwards and forwards between 15 and 5 minute timeframes. Just so you can get a real good feel of how price is behaving.
Richard, so you mentioned that there's not a lot of volume at the moment because of the current time being sort of 9:30 in the morning.
Yeah.
Would that stop you from placing the trade? I mean, given that most stacks are in your favour.
No, I would still, if I wasn't doing this session and I didn't feel that I would be guilty of leading other people into a trade, I would actually be in that trade now.
Right.
because the only thing you've got to worry, well, the only thing you've got to bear in mind is it's going to be fairly slow.
Mm.
It's not going to be a rapid movement because there just aren't the buyers and sellers in the market at the minute.
Do you find when New York opens, it can send it a little bit unpredictable?
Yes, I watched Paul when we first started talking about trading gold. Paul Turner did a few sessions on the 130 candle, and he had some success. And I think he was working on the 1 minute time frame, because at 130, for whatever reason, price does generally have some fairly rapid movements. And it moves in both directions. So if at 130 it moves rapidly upwards, it'll pretty sharply go downwards straight afterwards. So there are some pips to be had. But I watched Paul doing that, and I was a bit scared, to be honest. I tend to avoid the one. Just personal opinion. I tend to avoid 130. I'll sit and wait until the drama has died down.
Yeah, sure. Yeah.
And I'll be looking at trades at sort of 2 o'clock, 3 o'clock, 4 o'clock. And you've still got the high volume. It's just that the 130 candle is a bit scary for me.
Yeah.
You can make some decent pips, but you can also lose.
Yeah.
So I would say anybody who's, I mean, Paul's a very experienced trader, and he knows what he's doing. Personally, I don't risk it. I sit back and watch it.
Yeah, that's fair enough as well. Yeah, brilliant. Thanks, Richard. Thank you.
Okay, so we're a little bit over time. I'm happy to answer any further questions if there are any, and if not, I'll say thank you for jumping on. And I am recording this week. I omitted to record it last week, but I'm going to place it on my YouTube channel for anybody that wants to watch it. And of course, it's available in the Facebook group if anybody wants to have a second look at it. But if there are no questions, we'll call it a day. And thanks very much for jumping on.
Thanks
so
ever
much,
so much,
Richard.
Richard. That's
Thank
really
you.
good. Excellent.
Thanks so
Cheers,
much.
Richard.
Great.
Bye bye.
Cheers now.
Cheers,
Bye.
Bye.
cheers.